Hello and welcome to Business Today Television. You're watching Easynomics. I'm Siddharth Zarabi and my guest on the show today, Vivek Johri, the chairman of the CBIC. As the chairman, he plays a role in leading the entire indirect tax setup of the Government of India, but more importantly, he's played a very crucial role in the advent of the goods and services tax, in the policy making, as well as the crucial constitutional amendment bill that actually led to this tax. Mr. Johri, welcome to Business Today Television. Thank you very much for your time. Congratulations to you and all the officers of the department for 6 years of the goods and services tax. Before it came into being, many people doubted that it would ever happen. It happened, and now it's in its 7th year of its existence. Tell our viewers what has GST really meant for India and its economy?
I think the biggest contribution of GST has been in unifying the national market and allowing businesses of all shapes and sizes to get integrated, first of all, with the domestic market, across state boundaries, without any hassles, and in an easy way, and then even to integrate with the international or global value chains. So the integration of markets has been one of the big takeaways of the GST in my view. The second benefit that I can think of is the formalization of the economy. So a large number of small businesses, because of the benefits they see in being part of the GST, have chosen to be part, to align with it, and so to that extent they have been formalized. And the third, of course, is the revenue buoyancy that we're seeing over the last 2 years post-COVID, when GST revenues have started to look up, and that has provided a lot of fiscal comfort both to the center and the states. So I would summarize these as 3 important benefits of GST to the economy. And of course, I must add that all this has happened in a very trade facilitated manner for businesses.
Absolutely, and I'm going to take up all those 3 points that you spoke about and try and get you to talk a bit more about them. One nation, one tax, one market. Absolutely no doubts about it. And if I add the word One India, that fits in well too. But Mr. Johri, you would acknowledge that there are several big ticket items that are still not part of what is called a one tax. Why is that so? And in the 7th year, at the beginning of the 7th year, should we be hopeful that a time will come when all the items that are currently excluded would also get brought under the GST?
You see, the major sector which is out of GST for the time being, and it has been so ever since its inception, is petroleum. And the 5 petroleum products, namely diesel, petrol, natural gas, and a few others which are mentioned in the Constitution, are the only ones that are outside the GST net. The second item, of course, is alcohol. And as you're aware, there was some reluctance to include these within the GST ambit right from the word go, because of the huge revenue dependence on these commodities by the states as well as by the center. So now that the revenue position from GST is becoming more comfortable, I see that over a period of time, it would be easier to forge a consensus among the states to incorporate these items within the GST ambit as well.
Would it be possible for you to speculate as to what that period of time could be?
That is difficult at this stage, and you know that under the constitutional provision, the Council has to make a recommendation for the appropriate time when they should be brought under the GST net. But in my view, we will have to wait for revenues to stabilize for a longer period of time and to show the same kind of buoyancy. And then I think the states would be in more readiness to allow these to come in.
That's a good point, Mr. Johri. The point that you made about revenues, you of course know this, but for our viewers, in the initial few months and years, and then when the COVID slump kind of hit our entire national economy, there were doubts expressed by many states about whether GST was going to work for them as far as revenues are concerned. With the recent buoyancy and the trend that we are seeing, can it be said that the days of worrying about how much revenue GST will generate for the center and states are well behind us, and in fact it's perhaps a bit more than was initially expected?
Yes, I think that's a good way of summarizing it. I must add that in the initial period of launch of GST, the revenue did not come up to expectations, mainly for two reasons. One would be, that we allowed transitional credit to be utilized, and businesses had a pool of credit which they had inherited from VAT, central excise and service tax, which was allowed to be carried forward into GST. To add to that, soon after GST was launched, there were 2 or 3 tranches in which the rates of tax were reduced on a very large number of items. The threshold exemption, if you recall, the threshold for the small scale or the MSME exemption was also enhanced. So these were factors that obviously had an impact on revenue collections in the initial stages. And then, unfortunately, we had to see waves of COVID strike the economy and the global economy at that. So these are the factors that prevented GST from yielding its full revenue potential. But once the economy started moving towards normalcy post-COVID, we have seen a good uptick in revenue collections, and I'm quite confident that with the way the economic recovery is happening and post-COVID recovery is happening, revenues will continue to be buoyant and will perhaps surpass our expectations.
Mr. Johri, has full revenue potential been achieved, and what would that expectation be that you indicated towards that could be surpassed? What would that amount be in terms of monthly revenue collections?
So we are currently already ticking at more than 1.5 lakh crore per month. If you look at the revenue collections in the first quarter of this financial year, you would have noticed that they've already exceeded 1.5 lakh per month. Now, my expectation is that we'll continue to, clock revenue at about 1.55, between 1.5 and 1.55 per month on an average. And as the economy picks up, it may improve even further. There is scope for improving revenues by focusing more, and we're already doing that, on the compliance aspect of GST.
The compliance is an extremely important point, and I'll come to some of the key initiatives that you've been leading as far as improving compliance is concerned. But I want to come back to the point of revenue and link it to consumers. While all of India acknowledges the benefits that India Inc. companies have actually gotten from GST, for the consumer, what has GST meant? Because while earlier some of the taxes were hidden, Mr. Johri, I'm sure you have also got this feedback that some people say, well, the tax outgo has gone up on many items of services, for example. What does it mean for the consumer?
I think what has not been appreciated enough, and therefore we need to talk more about it, is that the tax liability or the tax burden on different commodities of consumption and different services has actually become more visible now, and it's a much more transparent regime compared to the pre-GST regime. Because if you recall, pre-GST you had central excise, you had service tax, and you had VAT as the major indirect taxes in the economy. And apart from service tax and excise, whose credits were allowed to be cross-utilized, the credits of these taxes were not allowed to be utilized for payment of VAT. So there was a build-up of tax on tax, and the net burden of taxation on any item, whether it's goods or services, was not visible to the consumer. With the coming of GST and a unified value chain, where only one tax sits across the entire value chain, if, let's say, a particular item is under a tax rate of 18%, the consumer can rest assured that the actual burden is 18% and not something much higher than that, as used to be the case pre-GST. So I think what has led to this narrative that GST has not meant relief for consumers is this element of hidden tax on tax, which used to be there pre-GST. Because if you look at the rate structure, then over a period of time, and this was explained in great detail by Honorable FM when she addressed all of us on the 6th GST day, by and large, on a very large number of consumer items, whether they're white goods, they're items of daily consumption, food products, essential commodities, the rate of tax and the burden of tax, if you were to compare pre and post GST, on many of these items, the rate or the incidence has actually fallen. So that is quite evident if one were to study carefully. And we've put out a very large number of charts and information on the social media to just convey to the consumer what the rates look like now compared to what they were pre-GST. So the rates have fallen, but I think there is a sense in a certain segment that the tax burden has gone up because they were not aware that these goods and services were actually carrying a tax burden pre-GST, or that they were carrying a tax burden of the order, which is now visible.
Mr. Johri, have companies, have the producers passed on some, if not all, of the benefits that have accrued because of One India, One Tax market? Earlier on, in the initial days, there was some policy intervention that had been required, but over the recent past, do you think companies are passing on the benefits?
Yes, I think so. And if you've had a look at the recent industry survey, which one very well-known consultancy had done with businesses in India, they acknowledge that there has been a reduction in cost for them with the coming of GST, which means that the upstream companies had passed on the benefit of GST, both by way of neutralization of taxes upstream through input tax credit, and by way of the reduced rate of taxes to them. And likewise, so I see no reason why these companies also would not have passed on the benefit to the consumers. Also, what has happened is that we have this mechanism under GST for an authority which was going into the question of and looking into cases where there were allegations from either consumers or anybody else to say that the burden. So there are 2 or 3 things that we're working on, and let me begin by saying that in the recent weeks, we have launched a major initiative from CBIC.
Why?
To reach out to taxpayers across the country and to interact with them so as to get a sense of what their major grievances with GST are. And these interactions have been very, very fruitful, and we've already completed 4 or 5 such outreach programs. There are more on the anvil. The whole idea of doing this was that we get fresh feedback from the trade about what are the major pain points that remain in GST. Despite a lot of simplification that we've done in procedure by way of digitalization, automation, and making information available to the taxpayer to make his life simpler, we've received a very large number of suggestions. Some of them pertain to policy, which means that they want us to, they've made suggestions about amending the law to make it clearer or to make it more trade friendly. Some of them relate to procedure, and the third aspect, and quite a big one, is about changes in the GST portal, mainly by way of providing more information to the taxpayer so that he's able to track his claims better, so that he's able to access information more easily, and so on and so forth. Now, this is a very rich feedback that we've got, and we're going to, in sort of a very time-bound manner, we're going to look at all these suggestions, and we'll take action to further simplify and streamline our processes. And of course, you're aware that over a period of time, we've made return filing very simple. The GST portal was upgraded so that there were no glitches that taxpayers had to face at the time of filing returns. We are making visible to them the availability of ITC at a given point of time in every filing cycle. So they're able to see exactly how much credit is available to them, and they can plan the payment of tax on the appointed day accordingly. So there's a lot of hand-holding that we're doing by way of providing information to taxpayers, and also simplifying the law. We have reduced, for example, the late filing fee for returns. We have rationalized, the interest provisions for taxpayers. So there are a lot of trade-friendly measures that have been taken with the approval of the Council, and we continue to work in that direction.
Mr. Johri, recently I came across a survey which said that GST had proven to be beneficial for medium and small enterprises. Obviously, you would agree with that, because earlier there was also criticism that the informal sector or the less formalized companies are finding it difficult. How would you describe the situation for that set of producers in the country?
I think it's an acknowledgement of what I'm saying, that GST has indeed meant relatively simpler procedures. Refunds have become streamlined. I do know, and we monitor, the quantum of refunds that we give out, both by way of IGST refunds, refunds on account of inverted duty structure, refunds on account of other reasons as well. And the amount of refunds have been going up every year. The timelines within which refunds are being sanctioned through an almost hands-free process is also getting compressed over a period of time. For exporters, for instance, getting timely refunds is very, very critical. And, the feedback I get from the trade is that it's working very smoothly. And many of these are MSMEs who are exporting regularly. Also, return filing, as I said, has become much simpler because of e-invoicing and, the reduction we've made in the threshold over a period of time. Many more taxpayers are able to generate their invoices electronically, and those invoices become the basis on which we are able to generate and create their GST returns. So we give them an auto-populated return, which they then just have to edit and correct before they file it. So there are a large number of simplifications for MSME sector also, under the GST.
Mr. Johri, there were expectations that have sort of built up over the past several quarters that there will be some sort of changes as far as the tax slabs are concerned, some rationalization. Could you once again sort of clarify what is the timeline and on that? I know it's a matter for the GST Council, but broadly, anything that you could tell our viewers on that front?
So, the group of ministers which was set up under the convenership of the Honorable Chief Minister of Karnataka at that time, Shri Bommai, was tasked with three things, if you recall. And one of them had to do with the rationalization of the rate structure. Already pronounced its verdict, and it's made recommendations to rectify a very large number of inversions as well as removal of exemptions. Many of those decisions have already been implemented. The only part of the mandate which remains to be addressed is the rationalization of the overall rate structure, By that I mean, if there are 4 major rates under GST, 5, 12, 18 and 28. And the expectation is that these would get compressed into 3 rates. So the GOM is supposed to deliberate upon that and give its recommendations. As you're aware, the GOM will be reconstituted now because of the change of government in Karnataka. And because of that, there has been some delay in receiving the report. As and when the GOM gives its recommendation, the council will deliberate upon it. So it's very difficult for me to put a timeline to it, but that is the lie of the land.
Okay, final question, sir, and this is about a problem that you've been, the entire department has actually been dealing with: fake invoices, input fake claims. How serious is this problem? Because some of these numbers seem to be quite big, and where do we stand on that front to clamp down on wrong practices?
So yes, it has been a concern, that we've had a very large number of cases where bogus firms have been created, either by stealing the identity of other people unwittingly, without their knowing it, or sometimes even with their consent. And these firms are then used to seed bogus input tax credit, which is then circulated in the system. Obviously, this has a revenue implication, because if this fake ITC is used for payment of taxes, to that extent, either the center or the states or both are not collecting, the taxes that ought to have come to them in the normal course. So both the center and the states have been quite active in dealing with this problem. For our part, I can say that CBIC had launched a drive way back in August 20, to deal with fake ITC. And so far, we have come across cases involving bogus ITC claims of roughly about 63,000 crore. So that's a very large number. And we have, in the course of this drive, we have unearthed about 24,000 fake GSTs. So that is a concrete number, which I can share with you. In addition to this, there are 2 other developments that have happened. So one is that the states and the center decided to work together, and to do a major campaign or a drive to clean our taxpayer base starting 15th of May. It was a 2-month campaign ending on the 15th of July. And how we went about it is that we used data analytics to identify almost 60,000 GSTs or taxpayers who appeared to be suspicious to us on the basis of risk parameters that we've used. And these risk parameters have to do with their behavior in terms of, how active they are in the system, have they been filing their returns on time, what is the pattern of their invoice generation, and so on and so forth. So we identified 60,000 such entities to begin with. And so far, we've been able to complete the verification of about 50,000 odd. And we found, as a result of this drive, that about 25% of the units we verified turned out to be bogus or fake. We've taken action, of course, in all these cases to either suspend or cancel the registration of these taxpayers, because they are admittedly fake, or at least that is what our verification shows. The exposure in terms of fake ITC in this drive has been of the order of about another 14,000 crore so far. And we're still counting. We have a few more days to go before the drive comes to an end. These drives are important in themselves, and they're necessary for cleaning the tax base and for preventing this kind of a misuse. I may also mention that this misuse is not unique to India. In any GST or VAT administration, the problem of the missing trader, whether it is the European Union or it's other major VAT or GST administrations, is a problem that all such tax administrations are having to cope with. But what has made it easier for us is that we're using big data, we're using analytics in a very big way to identify such taxpayers the moment they enter our system. What we've also done, and it's important to mention that, because these are very often cited as instances where we are trying to make the life of the general taxpayer more difficult. But actually it is not so. We have taken a large number of policy measures, for example, to discipline the filing of returns. And if you recall, two instances I would like to mention here. One is the sequential filing of returns, which was prescribed last year. And the second is the prescription by which a taxpayer is disabled from filing a GSTR1 return unless he actually files a GSTR3B and pays the taxes in the previous month. So these are some of the legal measures or amendments that we've carried out to address the problem.
Absolutely, and hopefully with all the cleanup that is also being undertaken by the department, things will only get better from here. Mr. Johri, thank you very much once again for your time with us today. With that, it's a wrap on this conversation. As GST turns 6, what is expected in the future? And like the chairman of the CBIC told us, that a GOM is supposed to give recommendations on one of the most important aspects, which is rationalizing the current slab rates, and hopefully there might be some action on that as well in the 7th year of GST. If you've been, thank you very much for watching. With that, it's a wrap. Goodbye. We'll see you again very soon.